Welcome to another edition of the Market Review, where we look at developments in the financial and capital market as it relates to the economy. It's a Tuesday, September 29, 2020, as the month of September begins to round up. And today, we're looking at developments in the debt capital markets. With me to lead the conversation, looking at the debt capital market developments in Nigeria, is Mr. Ola Olabinjo. He's the CEO of Skystone Capital. Nice to have you on the program today.
Thank you very much. It's nice to be here to share my thoughts on the Nigerian debt capital market.
Yes, Mr. Olabinjo. As you know, the
debt capital market has evolved. I mean, when you look at the capitalization currently captured on the FMDQ securities, it's over a 28 trillion naira market, and it prospects to deepen and grow further than that. Now, how would you describe the evolution of this market in terms of how it has spanned over the years?
Thanks. Let me just take you back. I think it was in the 90s when we all started banking back then. You would see that all that you would have in the debt capital market was basically CPs and BAs. And they were primarily being used by commercial banks and merchant banks to manage liquidity on their balance sheets. I mean, so you would have good names on your balance sheet or not so good names at times. And then towards quarter end or towards year end, you would find out that bank treasurers and banks would raise CPs on the back of the existing balances or overdraft balances or their loan book to manage either liquidity or to manage compliance with certain regulatory requirements. And that was about it. There was no debt in the market. The regulatory framework was also very lax, very weak, almost non-existent at that time. And I think what happened was that the central bank, having seen, and then with more maturity from the central bank and more understanding as to some of the things, and then with the banking challenges that happened, where banks were able to use BAs and CPs to hide a lot of things from the regulator, the central bank went in and clamped down totally on the use of CPs and BAs in the market in those days. And that virtually just dried up everything that has to do with the debt capital market at that time. That's on the short end of the market. On the long end of the market as well, I mean, you will find out that there was really no much interest, both in terms of understanding of state governments. There were primarily military, quasi-military, just getting out of it. So it was basically everybody was relying on the budget and the share of the national cake to fund both infrastructure and all the other things. So there were no state bonds. There were no other government quasi bonds to do. It was basically non-existent. But then the maturity came over the period of time, and I think Lagos state government and a few state governments pioneered issuance of state bonds, which were due. State had to go through rating, compliance, and so on and so forth. Let's stop there for now so that you can. Then, of course, you would give it a very high commendation to SEC, and then with FMDQ coming, which is a very commendable platform that Dele Kopo and his team has brought into the market.
I mean, you just said it there that the characterization of it of having weak regulations was part of the reasons why it had issues. But now we've seen that regulations has set the framework. We've credited the Securities and Exchange Commission for what they're doing, and of course the FMDQ market. But how has this supported infrastructure development? You've talked about states. I'm going to drill down to states immediately, but how has it supported infrastructure development? Looking at that as one of the major bane of the country, the need to have infrastructure to unlock economic growth.
That's a good one, but a very large discussion that we can discuss for about 2 days. But I'll put it in. I mean, look, it's obvious to us. let me put it in simple terms. Infrastructure development, before I go into the evolution and how bonds have been used to develop specific infrastructure in Nigeria, if you look at the 2020 budget, probably about $28 billion in dollar terms, about 28% of that, or 27% is devoted to infrastructure. And then out of that 28% of that, in that 28%, what they call capital expenditure, you have things like vehicles, air conditioners, computers, and all that. So in actual terms, dollar terms, what is available for proper infrastructure development of the whole country is in the region of about $2 billion, which really is totally inadequate for spend by the federal government. So you will see that for you to really get money to attack the myriad of infrastructure deficit that we have in Nigeria, you need to bring private capital to play by everybody, from the federal to the state. But you see, to be able to bring that private capital to play in our economy, you need to create so many interplay needs to happen. There must be the overall regulatory framework must be improved upon, and I want to commend again FMDQ and the SEC for all the things and the innovations that are coming. But that's not to say that the federal government on its own has not done a lot, particularly in the last 48 months. I mean, you must commend this government. Forget about the narrative that, look, let me give you an example. There are 10 major roads in Nigeria. I mean, and these are silent revolution happening that the handlers of communication of our government have not been able to explain it better. So 10 major roads have been concessioned for privatization, so that the capital can go into it and it can look good for eventual liquidity and post-construction debt capital market to intervene. Look at the Sukuk fund that's coming. And the Sukuk fund is a silent revolution. You know, I must also commend Okewo, who has a perfect understanding of FBN Quest in this case, who's done it tremendously well in leading and the understanding. The Sukuk fund targeted particular routes, and then they closed. The funds went into ensuring that those routes are delivered, and they're listed. The liquidity around it is good. If you also look at what the federal government has done by setting up a silent revolution that the president has signed, the 15 trillion Infraco PLC to be led by a man. So these are quite silent revolutions. If you look at what also is another Sukuk fund by Osun State government to deliver, deliver top-end public school. So you're going to be seeing that that's private capital that is going to deliver social programs, schools. Private capital is going to come in to deliver roads. I mean, who says after you deliver Lagos-Ibadan Express and you bring revenue assurance to ensure that the revenue is assured, you can collect the revenue, then you can securitize you can sell the road to private entities for $1 billion, for example, and make it. So there are quite a lot of innovation that's been happening over the years. But for us too, and I must say this, there's capital around the world. I mean, we're seeing over $100 trillion stranded capital, earning about 0% across, being under management by managers, by asset. But capital would only go to avenues and areas where the right liquidity is available, the right regulation is available, and the projects that are appropriately packaged to attract the right capital into the environment. I give you an example. Hospitals, schools, roads, power plants, all this, we do not have the budgetary. I mean, if you increase crude oil price to $120 per barrel, it would not be enough to take us to where we want to be. And I'll tell you something. We all know that we need to get to double-digit GDP growth rate.
Yeah.
The only key leveler of driver to take us to double-digit growth rate is infrastructure. And the key infrastructure you need to deliver: broadband, road infrastructure, power infrastructure, and so on. Once you deliver on those key infrastructure, then you will be able to release employment will go up, inflation will come down. And the only area where you can fund those infrastructure is private capital. Our budget, we're a poor country. If you look at our population to the receipts from crude oil and from non-oil export, we're still very, very far behind. We can develop our infrastructure. And it is only
private capital to help address those things.
And that is why people must take a second look at what is happening with the SEC and what Coco is doing at the FMDQ. And it's a silent revolution that is happening there. Look, let me give you 3 things. And I always tell people, there was a silent revolution that happened during the Babangida regime. It liberalized and deregulated the economy. There's a silent revolution that happened during the Obasanjo regime, which was the PENCOM. Okay, look at the volume of funding that's gone into PENCOM now. Okay, now there's a revolution that is happening under this government. The government is listening, and it's already concessioning and signing things into law to ensure that over the time, and it's not going to happen overnight. Okay, there's a market deepening program 2015, 2025, and then about 2020, 2025 done by the market operators. And these are silent revolutions that we need to take time to communicate to the masses. The handlers of government across the various strata of government must be able to work with market operators to let them take, for example, we have the Siemens Power deal. The Siemens Power deal is one of the greatest landmark deals any government in Nigeria has entered. Siemens deal is an increase in tariff, okay, to make it market reflective. Nigerians must know that for us to get there, for our children to get employed, for crime to come down, for inflation to be down, there must be infrastructure. And we must be willing to pay market reflective tariffs. And it's only then that private capital will further be able to come in to ensure that it is economically viable, it is economically profitable, as well as liquid post-construction. I mean, I put so many things in my explanation, but
definitely, Ola. I mean, you've mentioned some very interesting things. You keep saying the silent revolution of FMDQ, SEC, federal government agreeing some deals, but particularly the Siemens Power deal, market reflective, even though, of course, you are aware Labour has met with the government to look again at that whole issue. You've mentioned a very important aspect of the fact that when there's right liquidity, when there's effective regulations and effective project setup, it will attract private capital. And I like the part you said infrastructure will lead to double-digit growth. And that brings me quickly, if you can address this part, for subnational, for states. The recent budget report for fiscal sustainability of states shows that about 5 are among the top major states that are sustainable in terms of their revenues and abilities to carry on. States like Anambra, Lagos, Kano, those states that constitute those levels of states, and they're all economic hubs. So financial players have been saying that states that have good ratings and sustainable revenue flows should be the ones that should consider assessing the market, the debt market, to issue out bonds. But there are some states, you know, that are not really in terms of viability or being able to tie in sustainable ways of revenue. They're assessing the market. Isn't that a challenge that has to be addressed also in terms of performance of the bonds?
Yeah, I mean, absolutely right. So it's still part of the hangover and the legacy of the military and the non-understanding of how markets work. So a state government decides that, oh, I want to provide roads. I also have a program so in the package and the documentation to approach the market, it puts hospitals, 5 general hospitals, it puts 10 roads in the whole package, and it says, look, I'm going to the debt management office, I have to get this rating, and then I have to list it, and then I want investors to come in, and then based on my rating, the yield on my bond is 9% or is 11%. Now, the whole intention of packaging for such social infrastructure might be, we might probably need to totally rethink it, okay, and ensure that if I am Ekiti State governor, and I've done so much to ensure that there's a road between Ekiti and Ondo State, is a very important road for me, then I get the right concessions from the federal government to ensure that I bring private capital, I guarantee private capital revenue assurance and protection. I get all the regulatory and legal framework to ensure that that private capital can ensure that bring the leveraging funding ab initio, and then they can sell that particular structure package, okay? And then Ekiti State goes to look at 5 other projects and put it in a package, and Ekiti State privately. So you have 5 private guys that have come in, put the whole structure together, and list that viable commercial project as private people wanting to develop and deliver in Ekiti, and not as a government on its own. It's totally different. So, and that's why I like what those regulators, SEC, FMDQ, they are changing the narrative quietly, and they're saying, look, yes, Zamfara State, the fact that I am not, I don't look economically viable in terms of my revenue, does not mean that I don't have economically viable opportunities resident in my state. I mean, so there's a commodities exchange in Abuja. Who says that Zamfara State or Kebbi State cannot work on an ingenious program to ensure that the various produce, the various structures around is packaged into a product that is liquid, that is regulated, that can be listed, and then, so look, Ivory Coast, Ghana, and they thrive on cocoa and produce. Okay, the thinking has to change. And what has happened?
Thinking and strategizing.
It's the strategizing and think, and there's a lot that can be done. There's this cliche in the marketplace about debt capital in Nigeria being woken up to. And believe me, there's a lot. Look, the federal secretariat in Ikoyi has been in a legal quagmire in the last 30 years. Okay,
dead assets. Those are dead assets.
Dead assets. So you need a lot of capital to come in, and you can see it across Nigeria. I mean, I've done corporate and investment banking in the last 25 years in Nigeria, and I know that there is immense opportunity, and it is not a balance sheet. The bank balance sheet is important, but bank balance sheet cannot unlock the opportunity and take the country to the promised land. You need to both attract.
We need to rethink it.
We need to rethink how we approach the market.
It's okay. So let's quickly look at, in just a minute or two, if you can take a look at the opportunities for corporates now. You mentioned commercial papers back then. Now we're seeing it coming up, and several companies, look at the Dangote Cement, look at the issuance, look at various other companies that have come on board, Mixstar, Guinness, they're really leveraging the market now. And prior to now, it was more of governments that dominated, but now we're seeing the private sector coming in, and they are leveraging it to raise funds. Like FMDQ said recently, billions of naira have been raised, the activities have been improved amidst the COVID-19 pandemic. How are you seeing this, and what are the opportunities again for corporates in leveraging the commercial papers and even bonds?
Thanks. It would only get better. Look, and these are some of the results of the regulations and the market deepening that have been done by the operators of that market. And the platform that has also been provided for people to access. So Dangote has the right rating, the right balance sheet, the BOA, a Guinness, the Nigerian Breweries, and so on. But we need to come down market to ensure that on the short end of the market, in terms of CPs, okay, I need a 180-day funding to unlock certain opportunities and stuff to ensure that there's help in demand. I do not have to totally rely on debt from balance sheet of banks to fund it, because there are private investors that also want opportunity to invest in those short-term instruments. And once I have my ratings, once I have my structures, I can go in and raise money in the market, and we've seen that happen. What needs to also happen further now is that apart from the top tier companies, tier 1 companies like the Dangotes, the Nigerian Bays, the Guinness, we need to come down and look at the real viable commercial businesses to ensure that we begin to, so commercial banks and investment bankers need to ensure that the prerequisite for accessing those, for getting funding with those instruments need to be the education by the treasurers and the operators of such companies. It's before now, you put a phone call to a bank MD, traditionally, okay, look, we're coming to get a loan, we want this. Usually now, you will prepare yourself, treasurers will prepare themselves so that they can access various funding opportunities that are available in the market, including the debt capital market, using bonds or using CPs. And what are the things? Governance, good rating. I mean, those things are packaged, and then you look attractive to where nobody wants to throw money away. Yes. And if you look at the CP market in Nigeria, in the last, there hasn't been any default in repayment of matured CPs. So what you're going to see is that as the top tier accesses, the second layer and the third, even the SMEs. I mean, what we are doing in Skystone Capital, for example, with SMEs, we're helping SMEs clean up governance. We're helping SMEs ensuring that they have the right external auditors, the right internal processes. And then once people that have funding come in there, it's easy for you to use instruments, and it's going to get deeper and better. The last thing I'll say about this, for it to be effective, it must be, that market must continue to be liquid. I mean, for example, if I bought a Dangote at the primary market, I could be able to sell it down to. There has been over-reliance on the equities market, and on the bank balance sheet. And again, the SEC, FMDQ, and the central bank are doing that silent change in mentality of funding both public sector infrastructure as well as the private side of the business, and they must be commended.
Just 1 minute on this. There's the green bonds. You know that we're now shifting a lot to sustainable financing. I mean, just happening now, we're having a forum, Insurance September annually, is now looking at insurance and sustainability. The Bankers of Nigeria, they looked at financing Nigeria's sustainable future. So again, sustainable financing is very important. And for the debt market, we've seen developments around green bonds, climate bonds initiatives, FMD, other players have worked on this. I guess you have an insight into this. How can this further deepen that source of financing to address issues of sustainability? Cities like Lagos, of course, have signed up to the Financial Center for Sustainability, where we need to look at how we can finance projects that will improve a clean environment and sustainable future for the country.
Absolutely. If you look at it, not some the green bond successful. Access Bank, I guess, also closed on some. The FG, the federal government has also raised two green bonds, and AFC listed one in Scandinavia, if I'm right, in the last year or thereabout. And it's the way to go. And there are opportunities for, and what are green bonds? Green bonds are those bonds you raise on the back of projects and programs that are in line with sustainable practice and development. You will see states in Nigeria and companies that are yet to fully understand the importance of the 17 SDGs. Okay, the 17 sustainable islands, and it's easy to. Let me give you an example. Cross River State Government. Cross River State Government has the only available rainforest in Nigeria, and that's the one flowing in from the Congo all the way to
the basin, mangrove basin. Yeah,
No, it's not even the mountain, it's the rainforest.
Yeah. Rainforest, yes. This is specific rainforest that has been a reserve by the Nigerian Conservation Foundation.
Developing and packaging that rainforest to protection of that rainforest guarantees you to be able to raise enough money to develop certain critical infrastructure in River State. So who is advising Cross River State, for example? Okay, who is advising Cross River State to put a road through that rainforest? So there must be comparative analysis. I mean, look, there's what we call carbon credit. Yeah, and then we did, under the Kyoto Protocol, I did the first carbon credit qualifying project in Nigeria way back then when I did a gas conversion plant in Delta State. And the particular company was raising money from its carbon credit that it was able to sell. But in Nigeria today, it is shallow. That is we can only count about 3 companies that have been able to successfully deliver on green bond packages. And it also speaks to our commercial banks and our investment banks. Their understanding and reliance on the rents, historical rents that have been available, be it capital market rents, be it foreign exchange rents, be it even the bonds market and fixed income rents, has made our banks not to be able to develop competencies around the specialist area that can be massive. I mean, you also have the
diversify from what has been the norm.
Upsurge in electronic income and so on. This has made banks to be very lazy in developing specialist skills that would help companies that have these opportunities to even have an understanding. And look, FMDQ, SEC, and so on, they are at the top of the market, setting the game and giving the platform. But the players in the market themselves must begin to develop themselves to be able to bring transactions to these markets.
Definitely, Mr. Olabinjo, yeah. And just to let you know that the Churches of Bankers of Nigeria, they're even looking, I asked the president, they're looking at that area of developing capacity and competencies around sustainable financing, which is very important. But as we wrap up, let's look at regulations and policy environment going forward. Nigeria will be marking 60 years in the next 2 days. But going forward, a regulatory and policy environment that can boost the access of this debt market is very important if we're going to see the Nigeria of our dreams that guarantees inclusive economic growth. What will you be saying to that?
I mean, let me say, there must be collective agreement by the various chairs of government, be it the legislature, particularly the legislature and the executive, that we cannot fund and deliver on the electoral promises waiting on the crude oil proceeds or diaspora remittances and then nobody cannot fund our growth and deliver us. Believe me. And then once we have that belief and understanding, we must begin to now look at alternative ways of funding. And the responsibility of the legislature and the executive is to begin to think through the policy environment, the bottlenecks. Let me give you for an example. There shouldn't be a discussion around right of way for so long on broadband delivery. Okay, now you've had Kaduna state government and Ekiti state government coming in to say, look, we're waiving right of way charges. Because when you deliver broadband, you deliver growth, you deliver so many changes. Okay, and look, and so you have, if I were the chairman subcommittees of various houses, of various streams in the Senate and in the House of Reps, I will be meeting with the responsible ministers to ensure that what are the key challenges on the instant and existing laws that are bottlenecks to attracting that capital, that 100 trillion that is hidden somewhere under management, that is looking for the right environment to go and seek the best returns. For example, look, to register title in Nigeria, the cost of registering title and delivering title, even when you package all these things for delivery to the debt capital market, it's not just about the cumbersomeness, but it is exorbitant. But commend the fact that the ease of doing business has done a bit of scratch and there. They've improved on but it's not only, it's too little in the, I'll give you an example. I mean, a company in VI had, a local government had 15 people shut it down because radio and TV license of 50,000. And this is a company employing about, don't let me go there, about 100 people. We need to have a collective mentality in terms of the regulatory model. SEC, CBN can only provide platforms. There must be the civil servants, the political office holders, the legislators must have a common national agenda. What we see now, I mean, look at the railway delivery, the terms of the agreement with the Chinese is not a subject that should create and scare away investors. Such argument between chairmen of committee reviewing the activities of a minister, national television, and bringing out debate would only not do Nigeria any good, but it would scare away people from being able to bring that capital into the country. So there must be
a national cohesive policy and economic agenda that can help defend the debt capital market.
And I hope that our boss and our mentor in the industry that is developing the new strategy for government and Fed of Peace Society will be able to highlight all of these points and issues. And then there will be that collective drive to national development. So
I'll take it that a cohesive national policy and economic agenda will help to deepen our debt market. Is that correct?
Let me give you an example. I mean, just a passing. Okay. In a developing country like Nigeria, the most important minister in Nigeria shouldn't be the Minister of Petroleum or the Minister of Finance. It should be the Minister of National Planning, who should be the coordinating. I mean, look at what the role a gentleman called Kalu Idika-Kalu played under the IDB regime.
Babangida government, yeah. Working with Chuksokongu.
These are men of immense conviction in their economic theory and policies.
Yes. Definitely, I agree with you. We need to resolve that issue of the finance and budget national planning. It's now merged again under Mrs. Zainab Ahmed, and people like me, I felt that should have been a separate ministry, budget national planning. We've seen the works of the likes of Shamsuddin Usman, like you said, Kalu Idika-Kalu, lots and lots of great works there. Even previous minister said Odoma. But definitely, we'll get to that point where we can coordinate our policy and economic agenda. Like you said, your big boss, Mr. Teropita, said, I guess he's listening. A lot is expected from that Nigeria 2050 steering committee. And thank you very much, Mr. Ola Olabinjo, CEO Sky Capital, for sharing with us very deep insights around the debt market and how we can make it grow better. We assure you that we'll have in subsequent editions to discuss and give us further insights on this. Indeed, there's a lot to look out for Nigeria as it clocks 60. And indeed, this will steer growth and development in the country. Thank you once again, and wishing you celebrations ahead of this anniversary.
Thank you.
And that will be all for this edition of the Market Review.
We discuss developments around the capital market and, of course, the financial market as it affects our economy. Join us for another edition tomorrow, same time, 10 a.m. But you can send your comments and views, particularly today, what you think about the debt market and how you can develop and unlock opportunities for Nigeria to news@procheng.com. Watch our videos, reports, and analysis by joining our website, www.procheng.com, and also continue to get posted on what's happening in the debt, bond, and fixed income market. Till we come your way again, thank you for watching. Have a nice day and stay safe.